get started. So welcome to the latest episode of the Zenbooks Fireside Chat series. And so this one today is about the scientific research and development, scientific research and experimental development credits and innovation, and how a lot of small businesses should be using some of these programs available. And I think most businesses don't know about it enough. Some key insight here. I'm just going to turn off the screen share so we can see our faces here. There's basically over $5 billion per year that's given out through these programs to about 25,000 Canadian companies every year, which is kind of an average of 200,000 per business. So, you know, these kind of programs do provide for up to 68% of research and development expenses. And they can include research and development on new products and on research that businesses are doing on these kind of products. So thankfully, we have some amazing experts here today that are going to answer all of our questions, or many of our questions, hopefully. So first, we've got Albert Park on the call today. He's one of the tax managers at Zenbooks, who manages our tax practice. And basically, prior to Zenbooks, he had a career at Ernst & Young in the global compliance and reporting group. So we're happy to have our tax accountant here today. We also have Bruce Smith, who's Director of Growth at InVisionEdge. So Bruce is a founding member of the Canadian Medical Association and basically has had many innovative, disruptive roles in his career, specifically in marketing. He also has his MBA with a concentration in innovation and entrepreneurship from the University of Ottawa, and has studied across the world and currently leads the marketing and business development with InVisionEdge. So very good to have him as a resource on helping how businesses can shift their culture and their plan to align with these kind of strategies. We also have Christopher Young, who's the head of business development with Emergex. So Emergex helps with the SR&ED applications themselves. So there's a lot of write-ups that are needed for this kind of stuff. And so basically, Christopher helps with companies across North America and abroad, and it understands SR&ED very, very well. So we say SR&ED, that's the Scientific Research and Experimental Development Program, for which he's personally written many, many technical reports and has overseen federal audits as well. And so he also leads the business development efforts with Emergex. So very, very good to have Christopher on the call today. So yeah, I guess let's just jump right in. I'd want to give just, I guess, a couple housekeeping notes for everyone, that this is a fireside chat. So the idea is that we want to have your questions throughout. So we want to hear from you throughout. We're going to have some time at the end for kind of questions, but the idea is that we want that interactive conversation to occur. So if you want just kind of some quick follow-ups, you can send a quick message in the chat or in the Q&A option, as you may know, the Zoom webinar function has. So don't be shy. This is the whole point of this, is that we want to make the most of our access to these three experts today. So so yeah, let's just kind of start things off with a high level. Maybe this one is here for Chris here. So maybe walk us through, what is SR&ED?
Okay. SR&ED, well, first of all, stands for Scientific Research and Experimental Development, right? And actually that says a lot just right there in those words. It covers basic research, applied research, and experimental development activities, and it's a tax credit program for R&D. So it's run through the Canada Revenue Agency, CRA, and it provides credits to the inputs, well, the investments that a company has put into R&D, if it qualifies, if it's R&D that qualifies under the definitions of the programs, and it provides either a refund, that is, it directly refunds investment, or tax credits, depending on the context of the specific company, after the development has completed. And so one applies for the tax credits through the tax program. It's it's similar to the methodology used for a standard income tax return, a T2, and then gets if approved, it gets credits for that work that was done in the past. So
right. And so I guess with these, we're going to get into the details of exactly what qualifies as activity for SR&ED, but how much can someone get through SR&ED? Like if, you know, I know that I noted earlier there was like a 68% figure that I put in there, but generally, how much do people get when they qualify for SR&ED?
Okay, so the sort of the round numbers are 35% if the company qualifies, which is for CPCCs, or Canadian control Canadian private corporations, and if one is a Canadian controlled private corporation, one gets the 35% rate. And then for larger companies that don't qualify as those types of companies, then the lower rate is closer to 15%. However, it's a bit more complicated than that, because that's the federal portion, then there's a provincial portion. And in Quebec, for example, it can go up nearly to about around 74% of credits. Wow. Yeah. Now, the important thing to keep in mind is that the identifying qualifying activity becomes really critical, right? Because that 74% applies to the activities that qualify. And so that's where all the complexity of the program comes in from a technical perspective, is to identify which subset of all of the expenses that were undertaken by a company actually qualify for those credits.
Right. And so I guess there's many different jurisdictions. So like if in Quebec it's one thing, Ontario it's another. So is it wherever the head office of the company is, or is it wherever the employees that are working on these projects are located, or like, how does that work?
Yeah, it's where the work was done, right? So
okay, where the work was done. Okay.
A Quebec-based company may have, let's say, 80% of their engineers in Montreal, but 20% in BC.
Right.
And so where the work is undertaken is important in this program.
Okay. And I think maybe this is the right time to kind of get into the nitty-gritty of like what kind of activity actually qualifies for SR&ED. So what, like, is this kind of like rocket science only, or like what exactly qualifies for SR&ED?
Yeah, so this is a really common misconception among some people that are active in R&D in Canada, is that because they hear the word R&D and they have like this idea of what R&D is, like I think of Elon Musk, if we're talking about rocket science, or inventing some kind of new type of molecule or something like that. Sure, that qualifies, but that's not the only thing that qualifies. The program is very, very specific, and in fact, a lot of the complexity of the program is understanding exactly how SR&ED is defined, right? And just to come back briefly on what I said at the beginning, the scientific research and experimental development. So scientific research includes basic and applied research. Typically, that'll be done in university or in large enterprise. We can think maybe of pharma or nuclear or industries like that. So most of the time with SMEs, we're talking about experimental development. And my background is in computer engineering, so I dealt a lot with software development. But any technical field is in principle eligible. So what becomes critical then is to identify which subset of R&D is experimental in nature, and that's the entire program there. That's everything rests on that, right? And so I can talk a little bit about experimental development, what makes it experimental.
Yeah, maybe let's get into that as maybe some examples, like I'm trying to think, like if a barbershop or something has a new way of doing haircuts, like would that qualify? Or is it like, does it have to be like a new product that's being thought, or is it a new type of service? Like there's so many, ways of looking at it, right?
Yeah, like it's broad enough that I wouldn't want to just off the cuff, like say, oh, no, that's not eligible because it's the barbershop or anything like that. It really should be thought of in terms of what's experimental and what's not experimental. So in principle, any technological development will be perhaps eligible if it's experimental. Okay. And so first I'll define what I mean by experimental, and then we can think of a couple of examples. But another way to think about it at the beginning is there's standard practice and experimental development, let's say. Okay, so standard practice is the term of art that's used to mean any well-established methodologies or technologies. Okay. And typically speaking, someone coming out of a college or university program in a specific field will have a broad understanding of what occurs in that field, and may, let's say, after 1 or 2 years of experience in industry, have a pretty good understanding of how things are done in that field. If something is quite straightforward for someone like that, someone that's trained in the discipline, it would be highly unlikely to be experimental development. Okay. So that's called standard practice. It's things that it's technologies, techniques, and methodologies that are well understood in the field. Once you get into a scenario when you're doing development where it starts to become a little bit uncertain how you would approach a specific situation that you're in, from a technology development perspective, that might be the first hint that you're starting some form of experimental process. Okay. And indeed, that's the first defined element, is technological uncertainty. So technological
uncertainty. Yeah.
Yeah,
Okay.
That's a key term. Yeah. And essentially that's a barrier or obstacle which creates an uncertainty as to how to proceed. And of course that will vary from field to field, but in my field, let's say in the software field, it could be, for example, a piece of software that's well established in one context, let's say desktop computers, but we want to get that software to run or to implement the same function in a mobile environment, which may have all kinds of different types of constraints, like the need to communicate on an unstable wireless link, the latency of communications between devices on the network, the fact that you're running on a different type of operating system with different hardware capabilities, things like that may create all kinds of uncertainty as to how you would get that software that works perfectly well in desktop environment to work on a mobile environment.
Right.
Okay.
I'm trying to, I'm not gonna say dumb down, but I'm trying to make it as applicable as possible here. So, it could be a situation where I'm trying to, let's say the barber, is used to doing things a certain way, but all of a sudden this barber has to do, hair on a sailboat, and things are different now. Like, it's the same typical procedures, but they're it may not be applicable anymore because of different situational circumstances, or that's kind of where it may be something that's like typical process, or like you said, like after you graduate, it's like you kind of know the baseline even after a year or two, but if there's something new, is there other examples that you could kind of like?
Sure. Well, let's go with the barber example. So what I would like to see in the barber example is, at the end of the process, that there's some kind of there's an instantiation, at least in terms of technical knowledge, right? That not just, well, if I learn how to balance on, like you were talking about a boat, if I learn to balance on the boat,
I don't know.
get the hair, like that's not technical enough, and there needs to be a technological component. But you could say, okay, well, I'm going to develop a new type of razor, that
could be safe even in the waves if
could be
something were to
safe.
happen.
Exactly. It could be a safety device. It could be a platform that keeps you stable. Those are technological instantiations of, you have knowledge as a barber as to what you need to be able to do, and then you use that knowledge. And that's another component that's really important, right? That's why what CRA looks for, it's not just the description of what happened in the technology, it's who did the work. So if you want to invent new hairdressing technology, but you're a nuclear physicist, then they're gonna say, well, why you basically, as far as your technical discipline is concerned, you might as well just be a member of the public. But if you have 20 years of experience and a college degree in a hairdressing type of discipline, then that makes a lot more sense, because you're able to judge then. When you see a technological uncertainty, you can start to judge, okay, based on my knowledge, I have an idea of how I might be able to overcome the technological uncertainty. And this is another very important part of SR&ED, is that you must confront that obstacle and overcome it. And you do that, and maybe we can talk about this more a little bit later, but you do that by the experimental work, which is typically characterized by a series of hypotheses, and then iterative steps where you're implementing those hypotheses, collecting new information, and then going into a second step and a third step and a fourth step until you get to the end scenario, which is let's say the end of that year of experimental work, where you have a new steady state, if you will, that can be either successful or unsuccessful. We can talk about that maybe a little bit too.
Yeah. I mean, that's one of the topics that I think is important to talk about, is like, what if the project doesn't work, right? Like, you're spending a bunch of time trying to figure some new, widget or some new way of doing things, a new technological advancement. What if it doesn't work? Does it still qualify, or do you need like a reasonable chance that it does work to qualify? How does that work?
It doesn't need to work. That's one of the things that's really great about the program. You can spend a lot of money attempting to make something work, and it doesn't work, and it's completely okay. The key thing is that the nature of the R&D is experimental. That's it.
Right. Okay.
If you can show that, you're good.
Okay. So no, that's a good point. And then I think, going back to just a couple more examples here, I think, I'm thinking of like a marketing agency, for example, who may want to deliver services in a different way, right? Like, does SR&ED qualify for more of a services-based industry, or does it have to be really around like a technological change or some sort of widget?
It's really a technology-focused program, so
okay.
It's if we're thinking about a scenario where we get better at running our business, and our business is helping people to do sales and marketing better, unless there's a technological component, it would be very unlikely that would qualify.
Right. Sorry to drill down on all these things. I just like to see specific examples, right? Like, I'm thinking, like, even if there's Excels, like, we spend a lot of time on analytics around things, right? So building out some sort of like macros in an Excel, or even just like a Excel that has all these references and stuff, like, could that ever qualify as technological advancement on like analysis to better deliver your service? Or is that a little bit of a stretch?
Potentially, if there's experimental activity, right? So like, if in the Excel file you were just collecting data and then making a judgment,
because you got to build out that Excel, right? Like, you got to build out that templated Excel, let's say, right? So that the original template might qualify, is what I'm asking, I guess.
Okay, well, this is a really important point. So if you're making an Excel table and you're using all kinds of super advanced functions in Excel, and you have crazy macros and you're doing, like, pivot tables and stuff, no, that doesn't qualify.
Okay.
Not in and of itself. That's standard practice. It can be super complicated. It can take you a really long time, but if you're just doing standard practice, that doesn't qualify.
Right. Maybe Bruce, kind of question for you here, like on kind of these kind of practices that would qualify, right? Like, how can you try and, I guess, align yourself as best as you can to be an organization that can qualify? Or do you know what I mean? Like,
I think it goes back to a lot of the points that Chris just touched on. As an organization, it's less about necessarily your sort of org structure, and more about things such as, where is the work taking place, and what's the nature of the work, right? Do you meet the criteria that's in place? Are you applying a scientific method to it? Are you meeting that kind of how and why criteria that come along with the application? So really kind of drilling down and trying to focus on the work itself, and whether or not it meets that kind of scientific development function. And I don't necessarily mean scientific in the terms of, creating a vaccine in a lab, but applying that method of having a hypothesis and developing it, and testing it and seeing what comes out.
Yeah, no, that makes sense. We did get a question just now, so maybe whoever wants to chime in on this one. It says, are the university academic employees eligible for this program? So I'm not sure if it relates to, I guess, do employees qualify? Because I think the program is essentially for business owners. So maybe if the person was considered like a consultant and had, you know, would they be able to qualify that way?
I can kind of maybe give some input there.
Sure.
So basically you have to be an entity, whether you're a person, an individual, or a corporation, for example, or a partnership, whatever it is, for them to apply for the SR&ED program, right? And so if you're an employee, then you yourself will not be applicable unless you're working for the company that you're an employee of, and that company is the one, you know, that's initiating this SR&ED or like this research and development program, right?
Yeah.
So as an employee, I think it's pretty difficult to even approach it.
And I think this brings up a good question as well around like who owns the information, right? Like if you have let's pretend in this case that this is actually a business that's doing work for the university, but the university gets to keep that technological advancement. Does the business claim the SR&ED credits, or is it the university who gets the SR&ED credit because they get to keep the information, or does that not matter at all?
I can speak to that.
Yeah.
So there's a rather, how would you say, delicate or complex sort of methodology for determining who gets to claim credits if there's more than one company involved. Okay.
Oh, I see. Yeah.
And you could make it simple by contractually. For example, if you're a subcontractor working for another organization and you're doing experimental work in through your deliveries to the customer, there could be a clause in the contract that says the client gets to claim the tax credits. Okay.
Right.
If there's no such clause, then you have to fall back on other criteria. So the most important one being who is directing the work. So for example, if at the contracting company, the larger company that's the customer, all of the senior technical people and the people driving the architecture and the design and the flow of the work are at the customer site, and the subcontractor is delivering subcomponents that may be functional in nature, upgrades to the database and things like that. Even though the database work may ultimately qualify for tax credits, the work is being directed by the customer, and so the customer gets to claim the credits. Yeah.
Okay.
So you have to judge on a case-by-case basis.
Yeah. No, that's a good point. Okay, good. We got a question related to this as well that just came in. It asked, can we claim SR&ED for employees or consultants from outside the country? So I think what you were saying, Chris, was that it's based on where the location of where the work is being done. So the employee may have to be in Canada or in Ontario or in Quebec or whatever that is, but maybe you could just clarify that.
Super interesting question. So, I mean, and it's becoming more and more current, right, with work from home and working from remote locations. The program is for work done in Canada. It does historically have a provision for up to 10% of the claimed credits overall, right? Overall, for work done outside of Canada. And that is, that's in the program to cover activities like, for example, going overseas to run experiments in some kind of location that is very rare or hard to get to and doesn't exist in Canada, CERN or something like that, or maybe going to install or work with an overseas client to work on prototyping, things like that. The program, as it's currently configured, does not cover just unlimited amounts of work done remotely. And furthermore, if there's no T4 or the equivalent provincial documentation for that employee, if we're talking about employees, then certainly they're not eligible. But even if they have a T4 and they're doing 100% of their work outside of Canada, that wouldn't be covered.
Okay. Good. And maybe this is more of a question for Albert, or anybody else who wants to chime in, but is there a preference on that whole salary versus contractor? Like, is there, do both kind of qualify equally, or is there, yeah, like kind of walk us through, because sometimes you have a choice of hiring a person as a salaried employee or as a contractor.
Yeah, for sure. I can speak more so as a business owner, like a shareholder employee situation.
Right.
And so there is a limitation in terms of how much salaries you are able to pay yourself and then be able to claim there. So for owner managers, for example, I think it's a pensionable earnings that's set by the Canadian government, and then up to, I think, 5 times that is the limit that you can receive. And I think that's around $200 and something thousand as of 2022. So if you pay yourself more than that and you are part of the, I guess, the SR&ED program that you're applying for, then in excess of that amount, you can't claim it. But that limitation is not there if you're an employee and you don't own. There's a shareholding limitation. So if you own more than 10% of the company shares, you have that limit in salaries. If you don't, and you're just an employee, it's not that limitation isn't there. In terms of contractors, I'm not aware of any specific limitations as long as it is relative or related to the SR&ED project, but perhaps Chris or Bruce might have some other opinions there. Yeah.
Okay. So that's good. Let's see what else we have here as questions. There we go. Yeah, I guess maybe we want to shift gears here a little bit more towards an organization that is innovative, right? So some organizations may come out with new things here and there, but I think more from a culture side, Bruce, like, I guess, how is it that organizations can change the mentality of the group to be more innovative? Or like, what kind of strategic kind of changes can occur from a, not necessarily just pure SR&ED, but there's a lot of businesses out there that, you know, sometimes you have to convince employees to be a little bit more innovative, or there's kind of like, is it just kind of you tell people, hey, come up with new ideas? Like, I don't know. Is there anything you can add on that, Bruce?
Sure. So I'm just going to actually share a quick visual aid.
Oh, sure.
That should be popping up on the screen. Can you guys see that?
Yeah, that's great.
Okay, great. So the word innovation or innovative organization creates a lot of different sort of mental images or reactions for individuals. Some people think of innovation as, you know, working on advanced technologies like AI or blockchain or those sorts of things. Or they think of innovation as a moment where, you know, everything comes together and you have this brand new innovation that kind of shifts the paradigm of a certain market, or if it's significant enough, of kind of the whole world. But we see innovation as not being a moment, but a system. And what we mean by that is that it is possible to dig into an innovation methodology that enables an organization to innovate systematically over a period of time. And those innovations can be, you know, anything from, you know, extremely significant new products all the way down to innovating internal systems and processes and how an organization works. So what I've put up on the screen here is something called the Innovation and Strategy Blueprint. And you can see here, there's a couple different sides to this. We'll focus primarily on the innovation side today, but the reason that I have the strategy side present here is because it all starts with having a clear strategy for an organization. If an organization doesn't have that roadmap, doesn't know where they want to go, it becomes very difficult to innovate because you're kind of lost in the wilderness. You don't have that direction in place. So there are different components there that make up the strategy side of the equation. But when we look specifically at innovation, we have these 3 sort of core buckets. So the innovation readiness piece, so that you have the proper foundation that's in place for an organization to be able to innovate. And that often starts with leaders learning some innovation skills and learning how to lead innovative organizations. Then we get to the system component that I touched on, which is, you know, a common language for innovation and a process that you can follow to innovate at scale and innovate systematically. And so Developing that often requires some training and then practicing using the skills that you learn through training, through sort of hands-on projects and real work. And then all of that kind of leads into that culture piece, which is around aligning things like, total rewards, compensation, and sort of incentives for managers and employees to be innovative and pushing the envelope. And then making sure that the right metrics are in place and that all those components are available so that you can foster that culture of innovation that capitalizes on the work that's been done in those two other buckets. So there's a bit of an ecosystem at play here, but the simple answer is that a system is the biggest piece, and that's really what's required for an organization to truly become innovative.
Mm-hmm. Yeah, and I see the idea here is to essentially want to have an organization that is innovative and making it so that part of those innovations can somehow be eligible through SR&ED, and essentially making your, like, kind of not say subsidizing, but I guess subsidizing in a way your innovation and your new products and your technological advancement, right? Because I think it's one thing to kind of apply for SR&ED credits 1 year, but it's a whole other thing to have a culture of innovation and constantly be at the forefront of new technological advancement. And then that's really ensuring that you can get those large credits that the government offers, right? And I feel like that's an important fact.
Yeah.
Right?
And specifically in the context of the SR&ED discussion, one of the pieces of the innovation methodology that we use is using what we call cycles of learning. So call them plan, do, study, act, cycles of learning, PDSA cycles, which if you're working with the SR&ED opportunity, the SR&ED credits in mind, you can leverage that piece of the methodology, the plan, do, study, act approach in order to align with some of those SR&ED requirements. So again, you're learning how to innovate, and in this context, you're learning how to follow sort of a scientific innovation process that would if you're working on the right type of project, which we talked about earlier, would be very helpful.
Okay. Yeah. No, this is huge. This is good. Okay. And then I guess let me see, what else do we have on here? Maybe some more specific questions for you, Albert, or maybe Chris, but are we able to file our own SR&ED claims? Like, is that something that can be done, or do you have to use an organization to do this kind of stuff? Like, kind of walk us through that process.
Yeah, sure. I can start off. So the SR&ED claim technically can be done by yourself, but it's really not recommended. And one of the biggest reason, other than the fact that there's a lot of technical component to it that people like Chris specialize in, but there's also a compliance component that the SR&ED claim is tied to. And so if, let's say, you're a corporation, you have to file your corporate taxes along with the SR&ED claim. And so if you don't get those two together, then you're not able to get the credits and the benefits, right? Mm-hmm. And so that's the most critical portion. Are you able to translate or take information from your SR&ED claim and then put that into your tax return appropriately? And so if you don't know how all these moving parts flow correctly, then it's very difficult to even file your taxes correctly there.
Yeah.
And then there's also after the fact, if let's say you do get audited or the CRA comes and asks for more information, do you have the capability or the knowledge to actually defend your claims? Yeah. And so a lot of one of the biggest portions that we take part in as tax accountants is helping our clients with approaching the audits in a way that's efficient and in a way that the CRA actually, like, we understand how the CRA approaches certain audits and the things that they want to see, right? Mm-hmm. And so it's a lot more difficult for the layman, for the common person, to know how to go through this approach if they've never had the experience with it. Mm-hmm. So yeah, long story short, you can do it, but it's really not recommended unless you have the knowledge and the experience.
Yeah, and it sounds like basically you can do it yourself, but you won't be able to defend it. Like, because just the information that Chris was sharing earlier about, just the cycles of development and all the criterias that need to be met. I feel like it's very possible that someone forgets to put a specific word or a specific step that, is going to create that audit, and then you'll say the wrong word. Or I don't know if Chris, you can add anything there.
Yeah, definitely. No, exactly. So when we take on a new client, so as soon as we start that process with a new client, we will immediately begin to share the best practices around SR&ED, right? So everything we've learned over 25 years, and how to approach it, when's the best time to do the SR&ED. We work very closely with our accounting partners on those kinds of scheduling issues, and then we take care of basically everything with respect to the T661 form, right? Which is the supplement to the T2, and including all the financial considerations that we work, that we deliver to our accounting partners, and then the technical considerations, which are a specific part of that T661 that's answered in 3 parts. Those are what we refer to as technical reports. We write them using best practices and our understanding of what the CRA is looking for. And then after, like Albert so rightly said, after the fact, if there is an audit, we actually again work with our accounting partners to essentially take on the full burden of that process, or almost the full burden of that process, even coaching our clients on how to actually deliver the audit, which are events that take place live with CRA analysts, and how to avoid some basic pitfalls. Like, I'll just give a fun example. So one thing that you want to avoid when whether it's in the technical report or it's within the context of an audit, are phrases like trial and error. Oh, I tried this, it didn't work, so we tried this. So that's kind of a sort of a red flag, because it essentially gives away the fact that you didn't really know what you were doing. You weren't approaching it with a systematic, technical attitude, and so simple things like that can reduce the likelihood of successfully passing the audit. So one of the stats that we give at Emergex is that we have a historical 97% success rate across all the files that we've managed, and so that includes if there are cuts, which of course happen from time to time through an audit. We ensured 97% success for our clients in terms of tax credits.
Right. Okay. Yeah, and I guess another important factor is, like, how often do these audits happen, right? Because I feel like this is a very generous program. It's a very ill-defined activity that could maybe qualify, maybe not. Like, how likely are you to get audited on your first SR&ED claim? Like,
from my experience, around 10 to 20% of my clients who've had done SR&ED claims usually get not an audit, but at least like an information request from the client, from the CRA. And then when you can't fulfill that request, then it might be elevated into an audit. And especially during the information request, what I've seen is if there's a lot of bloat in the technical writing, that's not very helpful in terms of how bloat?
Kind of like
just like what Chris has mentioned. Yeah, like we've tried this, and there's no technical language in there that's I guess that supports like a hypothesis and the technical uncertainty that goes into it. Yeah. Then that will usually escalate it into an audit, from what I've seen. Yeah.
And Chris, any thoughts on the audit side, like likeliness or frequency?
Yeah, so if you do a pretty good job, like making sure that you've got the right type of people in the team, right? Because you actually describe in the T661 who your technical people are and what their degrees are and why they're their experience in the field. If you do a good job with that, you do a good job with the technical write-up so that it doesn't immediately strike a CRA as being problematic. You're likely but not guaranteed to get what they call an FTCAS, or a first time, I forget the exact acronym, but it's essentially a presentation of the program by the CRA, so that to ensure that the company, the claim, the company in question, the CRA refers to companies claiming tax credits as taxpayers, so that to ensuring that the taxpayer understands how the program works, rather than an audit, right? So I don't know the exact number, but I wrote technical reports myself for about 2 years. I think I wrote about 20 reports, and I went through 3 audits. So that's an interesting stat to keep in mind.
Yeah, no, that's good to know. Okay, yeah, and then I guess on the write-ups, there's, you need to know the topic so well. So it must be tough for you if you're, I guess, Chris, you're the one writing them. Oftentimes you need to know enough of the technical, whether that's software or hardware, or if it's some sort of manufacturing, like you need to, I guess, have a lot of interviews and conversations with the business owner or whoever's like actually operationally doing this stuff, right? Like,
yeah, absolutely. So and also it's worthwhile mentioning, so I talk a lot about computers because that's my field, but I mean, you know, if going back to the barber example, I mean, you know, you could think about also, like, is there a different type of chemical process you could use to develop like an amazing new shampoo? You know, that would also, that's also technological in nature and might be eligible. But yeah, so what we do is we use people that are trained in the field, in the field in question. So it could be computers, it could be agricultural technology, it could be industrial applications, petrochemical mining, and then our analyst on the Emergex side will be you know, trained in that field so that they can understand what's going on from a technical perspective when we speak to the company that's going to be making the claim, our clients. And yeah, we go through an interview process. So typically we'll request raw information, raw data, often in the form of a technical write-up by the engineers or technicians that are working with our clients. But it can be very simple, very brute force. It doesn't need to be nice. But it does need to have a certain level of technical detail. Like I'm talking about, like, point form. We did this, then we did that. This is the problem that we had. You know, this kind of thing. And then we take that, and then we turn it into the structure that the CRA is looking for. And sometimes we have more than one interview. We'll have follow-ups. We'll have questions until we're satisfied with the presentation.
Okay. Yeah. No, that's good. I feel like there might be some benefit here. We still have, I guess, 15 more minutes to chat. There's a few more questions I wanted to run through, but I think it'd be good to go through some more examples of eligible activity. I think that really helps a lot of our the people that are likely on the call, small business owners, figure out like if they could be eligible. And so, you know, we've talked about the barbershop example. We've talked about the software developer who's making like a new thing. I'm trying to think of like other situations that people may not realize that their activities are actually qualifiable activities, right? Can you run through a couple more examples, Chris?
Yeah, I can. I think what I'll do is I'll actually just read from the CRA documentation.
Oh, okay.
Some of the work that's eligible. So there's kind of 2 levels. Okay, when you're looking at this, the first one is the experimental nature of the work. Okay, so I went through that in some detail. Yeah. And if you qualify from that experimental in that experimental context, there's a second level of work that is admissible or eligible, which is called support work. Okay, and that's a really important category because it includes a lot of effort. So, you know, you want to, if you're doing a SR&ED claim, you want it to cover a significant portion of the R&D that you did throughout the year, if possible. You know, so you know, remember, you're looking at 74% in Quebec, right? It varies by province, but 74% of whatever's eligible, right? So if 75% of your work is eligible, then it's 74% times 75%. That gives you your overall credit. If 25% is eligible, then it's 25% times 74%. Okay. Now, support work. So think about it as you got your core activity, which is experimental, and then around that you have supporting activities, which are also eligible for the same level of credits. Okay. But if you don't have the core experimental work, doesn't matter how much support work, you're not supporting anything, right? So what they list as a CRA lists as support work is engineering, design, operations research, mathematical analysis, computer programming, data collection, testing, and psychological research. Now, one thing I find extremely interesting about this is that it lists computer programming. One might think that, well, if I'm doing, development, then isn't the development the computer programming? But that actually gives you a hint as to, no, it's actually not sitting there and typing that's the development. It really is, you want to have a broad view of what's experimental activity. So for example, if you're at a meeting with your system architects, or you're, in a computer context, or in a, let's say a petroleum context, you're in the same room, but you're talking about the molecular structure of some additive that you're developing. Like, are you doing any development at that time? Well, you are, because that's contributing directly to the to advancing the innovation, right? And it's critical to advance to going through the experimental steps towards the possible technological advancements, and that's another term, a technological advancement at the end of the process. Okay, so all those things are considered to be support work. So if I can show that, I don't know, I did 25% of my R&D was fundamentally experimental in nature, and then that there was another further 25% that was support work that would otherwise be standard practice, but because it's supporting the experimental activity, it becomes eligible as well. So then you have 50% of your overall R&D that you then claim in your T661. Okay.
Right. So the experimental is the fundamental, and then there's the add-on time that's spent to support that work, but without the experimental, it can't be claimed. Yeah. Okay. Okay, and then maybe Albert, just on deadlines, like what are the deadlines for these SR&ED applications? Basically it needs to be filed with the corporate tax return, but those are two different applications, right? Or two different filings. Maybe walk us through that.
Yeah, so you can file a SR&ED claim as a sole proprietor, as your own business, or as a corporation. So as a sole proprietor, your tax filing deadline for your personal tax return is June 15th. And then from that point on, you have another 12 months to file. So the next year's June 15th will be your deadline. And then similarly to your corporate return, you have 6 months from your year end to file your tax return. And then you have an additional 12 months on top, so 18 months in total. The one thing I'd like to mention there is it's usually recommended to file your SR&ED claim along with your tax return at the same time. And the reason being is if you file your tax return first, and then you file your SR&ED claim, then essentially what must happen is your initially filed tax return has to be amended. And so you have to change your tax return to include the SR&ED portions, and then you have to file again. And what I've seen personally is that kind of amended SR&ED claim usually has a higher chance of the CRA claim back, because it kind of shows that perhaps you're not ready to do the SR&ED claim, but then you did it as a matter of fact kind of thing. And so that could be a reason. I'm not 100% sure exactly what the CRA's reasoning is, but that's just the likelihood just increases from what I've seen. Yeah.
And it sounds like there's the actual filing deadline, but I think there's also kind of more of a practical timeline as to actually going through this process, right? Like, because there's the whole gathering of information. We want to make sure that the timesheets can properly reflect the different types of activities. We want to make sure that we're educating the team internally on how to classify their time and how, at what specific detail. Like, I think it's not one of those things that can be done, I guess, at the end of the year. Once the year end is done, it's like, okay, so how much do we get as SR&ED? It's like, it's hard to quantify that if you didn't plan for it appropriately, right? Like, you kind of need to do that work ahead of time too.
And so the series is pretty generous giving that extra 12 months. But as long as you have all your supporting documentation and such, like even if they come back, it shouldn't be a problem, right? So like, I don't want that to be something that holds anyone back from filing a SR&ED claim after the 6 months or so of your corporate or individual filing deadline.
Right. Okay. And then maybe Bruce, a question for you. What do you see as like just common pitfalls around innovation in an organization, right? So that you see as like an attempt that typically doesn't work, or like kind of like, yeah, is anything kind of ring a bell around like pitfalls there?
Yeah, for sure. So it's very common for organizations to start by saying something along the lines of, we need new ideas, we need big ideas. And then they go about trying to solicit ideas through traditional brainstorming methods or suggestion boxes or those types of things. And management sorts through them and picks one out and then goes and tries to do it. That is very sort of ad hoc in terms of how you're trying to generate ideas. But the deeper issue there is that you haven't actually started with a problem. So you haven't actually started with trying. Yeah. So trying to understand an opportunity that exists, a pain point that exists, something along those lines that is the catalyst for the need for innovation. And so that's a very common one, as we see organizations wanting to start with saying we need ideas, rather than truly understanding the opportunity or the challenge that they're trying to solve for. So that's a very common one. And then beyond that, another big one is just a lack of leadership alignment with the directive to be more innovative. So I worked for an organization in the past where innovation was talked a lot about quite frequently, certainly from the CEO. He was really pushing that he wanted us to be an innovative organization. But the challenge was none of his senior executives were motivated or incentivized to be innovative. They were all being measured and rewarded based on traditional business measurements and metrics. And therefore, it was a very significant personal risk for them to step outside of that and to try to do things differently and be innovative. And so it's really key that a leadership team be aligned and incentivized along with that innovation directive. And that's why I go back to saying innovation actually starts at strategy. You need to have the clear strategic direction, and then innovation becomes a way that you can execute on that direction.
Interesting. Yeah. So it starts with the strategy, and it has to be top down, but it has to be properly implemented in a framework, and then innovation can occur. And that's also how like the experimental development would work, is that you need kind of some sort of feedback loop that you're showing what you're trying to accomplish, and there's kind of a framework for the new technological advancement, like the new experimental work. Interesting. Okay. And then maybe on the specifically on the SR&ED side of things, either Albert or Chris, what do you see as common pitfalls in SR&ED applications, or in companies just saying they want to claim SR&ED and they have no idea what they're doing? I don't know. Like what do you see as common pitfalls in that area?
What I've seen more on the technical side, based on some of the audits that my previous clients have received, is some of the criticism they received was that their technical writing or write-up was not very chronological in nature. And because, to my understanding, technical write-ups has to show that you've taken a very systematic approach to your experimental development. There has to be a beginning and an end, right? But then if you don't have that start to finish in a very nicely laid out way that shows the steps you've taken, then I've seen a lot of SR&ED claims fail as a result of that. Just because they want to put as much technical jargon into the write-up to make it look like they've made a experimental development kind of thing, right?
Yeah.
I mean,
make sure you have all the keywords in there, but it doesn't make any sense, and it's not
that's what I've seen before.
And maybe Chris, if you have any thoughts on.
Yeah, no, that's 100% right, Albert. I think that some pitfalls that come directly to mind are if the people involved, let's say the senior management of the company, are not very technical, but they're in a technical field, they may believe that what they're doing is extremely innovative, but it isn't. It's just standard practice. And so that's one thing, right? A sloppy presentation of what happened technically is another one. So I mean, you might be doing experimental development, but the way that you present it, just saying, you know, oh, good example. If you're focused on functional descriptors or commercial reasoning, like, you know, we really wanted to reduce the price of our technology because otherwise we wouldn't get this big, huge client, that's like automatically like disqualified, you know. And so you need to know how to present it. And again, it comes back to the experimental nature of the work. If you do have experimental work and then you're able to show that in a clear manner, you should be good, right? Because that's what the program covers, right?
Right.
Yeah.
Yeah, and I thought it was interesting. You mentioned like a lot of companies think they're innovative, but they're really not, you know. And I'm sure, Bruce, you've certainly seen this before, where people kind of tout that they're the innovative disruptor in the industry, and then it's just like, okay, great, there's 100 other competitors like you know, that are doing the same thing or whatnot. Yeah, no, that's really interesting. See if there's any other questions on here. I think we've gone through all of the questions from participants. Let's see if there's anything else we wanted to chat about. I think we briefly touched on it, but I just wanted to confirm on the SR&ED side of things. Does the organization actually have to be profitable to claim a credit, like the SR&ED credit, or is it even if you're not profitable as an organization, is this like a refundable credit? Like you can actually get money back even if you're losing money year over year? Like, kind of walk us through that.
Yeah, so no, so profitability is not a factor, which is a good thing. And as for the refundability portion, there are credits that are that is a refundable portion. There are ones that are not. So even if you're making a loss or you don't owe any taxes, if you're eligible to receive this credit, you'll get that money back from the government. One thing you do have to note is such money is considered a subsidy from the government, and so it is technically income. And so that has to be reported in the year you receive it as part of your total tax return in the following year.
So you may have declared a loss, but then you're claiming SR&ED, and then you actually end up making a profit, and then you end up having to pay tax on the money that you got. Yeah, that's interesting. Yeah. So we only have a few more minutes left here. So if anybody on the call has any questions at all, please, again, put it through the Q&A, put it through the chat. We want to kind of get through this. Let's see, what else do we have on here? I think we talked about it briefly, but there was the salaries versus dividends. So I think a lot of the people that we work with and small and medium enterprises are, you know, they're the owners, but they're also employees, right? And so from what I understood, salaries are better than claiming dividends. So if you have a choice as a form of compensation, as the owner, are you more incentivized, I guess, as a salaried employee instead of taking out dividends?
Yeah, so salaries are a claimable SR&ED expenditure, but dividends generally are not, including bonuses as well.
Including bonuses as
bonuses
well.
If you are, well, let me rephrase it. Bonuses as well if you're like an owner manager that's earning more than that 5 times pensionable earning that I mentioned.
Right.
And so normally bonuses for an employee should qualify if it's related to the SR&ED expense. But that's a common mistake where they think a bonus would be a part of salaries that they're claiming as an owner manager.
Okay. Well, I think we're at the end of it here. So I want to thank everyone for attending. I want to thank Albert. I want to thank Bruce and Chris for all of your help. Lots of back and forth here. I appreciate the format, being able to go back and forth. I think to clarify kind of sentences or points that you bring up. I think this kind of format really allows us to dive in and to keep going until we better understand the topic. So I thank you all for dropping by today and helping out. And yeah, enjoy the rest of the day, everyone.
Thanks a lot.
Thank you.
Thanks, everyone.
Bye.